Hey. Okay, let's get a move on with the day. Yep. Yo. Yes, you are. My voice sounds really messed up. I was just hawking my lungs up for like 20 minutes. I might take quick little breaks here and there to do it again. What's up? My heart rate. No, I'm just kidding. Well, after lunch, I ran a mile because I haven't been running lately and I wanted to run again. And the weather is nicer today, but the air is really dry. And I get really bad airway constriction sometimes when I exercise like a lot or like hardcore. It's like they call it like bronchital or broncho constriction or something like that. It doesn't happen all the time, but it happens when I am out in the cold or like whatever. I should have wore like a face mask or something. So north, far north. It's not cold today. Like we had like 8 inches of snow or 9 inches of snow like 2 weeks ago, and then it dropped down to like 15 for like a week, and now it's really nice. It's gotten back up to like near 60 today, but the air is really dry. I don't know. I just didn't think about it. I always forget that happens to me, so I don't know. It doesn't happen when I'm like working out inside. I like never cough. But when I go outside and I do like a heavy workout, if the air is like messed up, I get really bad, like everything. Like allergies, like I get like nasal drip and then all kinds of stuff. It's gross. So, yeah, if you run in the cold, sometimes your airways constrict. And it's not even that cold, but I just wasn't thinking about it. So, oh well. Next time I'll wear like a mask or something. But I ran a really fast mile for myself. New personal best. I got under 7 minutes, 30 seconds, which I know. Some of you guys are like, well, that's nothing. Some of you are like, what? Everybody's different, right? But like when I was in high school, I couldn't run like a 9-minute mile because I would stop so much. And I wasn't like way out of shape. I just didn't realize like you could just keep going, you know? I would just stop because I was lazy. And they were like making me run. And I had a really bad experience in middle school, which I guess is different for everybody. But I joined track and field for like 2 years in 7th and 8th grade. Which was like our intermediate middle school at the time. And I really wanted to be on the sprint team when I joined, and I thought I would enjoy track and field because I didn't really feel like I'd make a traditional sport team. I didn't really want to play football, and I had just gotten done playing baseball, and I've been playing baseball since I was a kid. So I was like, I don't really want to play baseball anymore. Not because I didn't like it, just didn't really want to play it at like the high school level. But I was like, I still want to do something. So I was like, I'll join track and field. And I wanted to be a sprinter. And I thought I'd be a really good sprinter because it's pretty fast. And I didn't really like long distance running. So I tried out for the relay, the sprint team. There was like the third seat or whatever in the relay that they were offering at the time. And sorry, it's really funny to me now thinking back on it. Because my friend who was very fast, I remember his name, but I won't tell you his name. He definitely was a better sprinter than me, but for whatever reason, like that day, I don't know if he was like off or something, but it was like splitting hairs. Like it was just a competition to see who took the seat. And I made it to the final round, and I like lost the competition by like, I don't know. I remember it was like really slim margin at the time. Looking at how runners are nowadays, I'm like, this wasn't a slim margin because it was like 200ths of a second or something, which or two, yeah, something like that, 200ths of a second or something. I remember it was like really small, but looking back on it, I was like, the margin was actually quite large compared to like professional runners. Anyways, so he beat me and he got the position on the sprint team. Well, my track and field coach, for whatever reason, I would have preferred to do like cross country or something at that point, or anything really, you know. Kind of had like lanky body. I could have done like discus or something. But I guess he thought since I had long legs, that he was like, hey, we're going to make you do the 800 and the 1600. If you don't know, those are basically just long distance sprints, and they're awful. And so it really turned me off to like running because it was embarrassing. Like I would go to the track meets and I would die. I would just go there and die. And not literally die, but just go there and die. Like I would go and lose every time. And I went to like all the track meets for about a year. And I technically was on track for like 2 years, but I opted out of a lot of the meets, and because I was like, I'm not good at this. Like, it's just embarrassing. I would get like second to last place. The only guy behind me was like the overweight kid who was just trying to like better himself, you know. And he's like, "Why are you back here with me?" And I'm like, "I don't know. Um, I just am." So, anyways, so I remember distinctly in high school when we had to do, of course, like everybody in high school, you'd have some elective PE class or whatever you had to take, and they do all the tests and junk. And I just remember like I never really broke the 9-minute mile, like for myself personally. If I did, I may have gotten into the 8s, but I just remember those numbers being around like 8 to 9, and never really feeling like I was very good at it. And yeah, it was always embarrassing too, because there was kids that were running like 4.5-minute miles. Like we had a kid who would run like a 4.5-minute mile. And of course, he's like a star athlete, you know, on the football team too. But it's just rough, you know. So you kind of like just find that you're like not very good at certain things, and you're just like, I'm just not going to do it. But then when you get older, you're like, okay, you know, there's a lot of problems with running. Biking is obviously better for your knees, but there's a lot of good things too. And when I started doing boxing, running was not optional. I started boxing about 5 years ago, and I did that for a couple of years before I moved to Taekwondo. And when I was doing boxing, it's not an optional thing. Road work is just part of endurance building, and so pretty much run like every single time you come in to train. The coach tells you to like, hey, go out, run half mile or whatever, a mile, warm up, then come in and do like 60 seconds worth of jump rope, and you're just like constant cardio. And so I've been trying to get back into it, and like I haven't I've been steadily getting better. I got today I got a 7-minute 26-second mile, which is pretty good for me. That's really good. So new personal best. But I got to tell you, the airway constriction was not fun. So coughing my lungs out afterwards. I was fine. I could breathe through it. I was okay. It wasn't even like I didn't even sweat that much even after I was done. I mean, I hydrated properly, but I felt good. But then my lungs were like, nope. Started like tightening up. I was like, I'm gonna die. So if I sound weird today, that's why. I got a lozenge in my mouth right now. So hopefully it helps a little bit. No, I don't. I know what it is. It's like it's probably just the weather, because like I've done this kind of exercise before, and I'm like fine. But I think the air was just a little too dry and chilly today. But I might need to get one and just pump like a little bit before. You're supposed to do like a puff or something before you run or something like that. I have a friend who's a physical therapist, and she does it, and I'm like, well, I guess I could get one, but I don't have asthma, so it's not like asthma where I'm like dying forever, prolonged, death. Like I'm fine now. I feel better now. I haven't coughed in like 15 minutes. But I was coughing for like solid 10 minutes. Like just horrible. And I also think it's like it's allergies and stuff, all this weird stuff. When you do exercise, your body's like, "Hey, we got all this gunk in here, man." And I'm like, "Yeah, we do." So, anyways, sorry about the voice, but it'll get better, I think, as the stream goes on and my airways open back up a little bit. So I'm already feeling like a million times better. This setup right here that I'm looking at right now is NNOX. I'll talk about AMC first today, but in case you're wondering what's on the screen, that's NNOX. So this is NanoX imaging. This is the one that has the massive diamond, but I'm very concerned about a potential breakdown. Now, this chart does not have that diamond on it, and the only reason I have this up right now is I am in an active trade, and I'll talk more about this in a minute. But if you're just wondering, like, what are we staring at? That's what we've been staring at, and I'll get back to this one. I'm expecting it to move back up to near 810 before too long, although I'm not positive that it's going to yield a lot of monetary result in terms of a trade. I'd got shares and options contracts, but I think the options are going to be pretty flat. Another trade that I entered today is AMD. This one also looks kind of bad right now because it's coming back down, but on the bigger picture, I think it's in a really potentially very positive spot. I have a feeling there could be a final drop that comes below 112.70. So that's probably my biggest reservation right now. But if this can build a support just above 114.46, and it was there earlier today, this is technically a diamond bottom and it has a really simple breakout target. So if you're looking for a good trade, maybe stay tuned, because I think AMD is going to provide a really simple trade potentially back to 117 and maybe way beyond. It's got earnings coming up in February. It's not quite there. It's next Tuesday, I guess. So, this is in preparation for that. But it's got gaps galore up above. I mean, it's way oversold, like on most time frames. It's got long term, it's oversold. Like it's got divergence, everything about it. And I was screaming about this and talking about this back on January 13th on the first play that I did, and I made money on that play up to here. But I'm looking to do it again because I think this is a really pretty straightforward play. I don't know if any of you guys followed Apple. I didn't keep following it, but man, Apple ran like crazy before having a pullback. So it's still running. It's up to 238, 240. It's pretty much right where I thought it was going to be. And, for me, it's like I got out like right here. And I don't really know looking back on it why I did that, because all in all, like this was a play that was pretty much in the bag. Like I had the best possible entry like way down here at 221.50. Like I had so many good things going for me on this. Those calls that I bought them for like $3.80. I checked when it popped up over here before this pullback. They were up to $8. So they were over 100% up, and then they went up again. So I can only imagine that those calls are like $10 a piece or something. I mean, it would have been a ridiculous trade. Why did I get out so quickly? Well, the principle of it was that it hit like a place of a lot of resistance, and there was a gap that day, and it's still there, I think. I don't think it ever filled down below at 223. And, I'm not super accustomed to Apple's chart. And when I'm looking at this, I'm like, well, it kind of just went from where I thought it was going to go to the top and the edge of the channel here. Now, looking back on it, you're like, well, yeah, but it wasn't even oversold like on certain time frames. That's not quite true. It got oversold on quite a few time frames pretty quickly, overbought. But yeah, on like the larger time frames, it was fine. And I had a feeling in the back of my head, you know that feeling where you're like, I feel like I might be taking this off the table too quickly. And I exited part of the position early in the morning. Um, I think it was on Monday, I guess. Well, I felt like it was a long time ago. No, it must not have been Monday. It must have been last week. I don't know. Well, I guess it had to have been Monday. It feels like a long week, I guess, but it's only been 2 days. It was Monday. Sorry. And I just did it on principle. Like it hit like 60% gain or something, and I was like, that looks good. And it's right where I thought it was going to be. So I wasn't looking for anything way beyond 228, 229. I even had this on the chart thinking it might come up going into earnings and break out here and then maybe come back to retest. That's still possible. So that retest would be at 222.81. I think that's a possibility. I don't have that on the chart, but I think it's very possible it comes back down again to that channel. And it's just the way this is going. It's got these massive moves that have deep retracements. So we'll see. And if it keeps going, it keeps going. You know, if you got in this and you're still in it, you're making bank. We were joking about those 240s because there was like 40,000 open interest or something ridiculous on those 240 strikes, and they got them, you know. So lesson learned on my part. Next time I play something like Apple, I know what to watch out for and what not to I guess, you know, the idea of like scared money doesn't make money. And now I know kind of what to look out for because I just didn't know. And I'm not upset by it. I'm not like weeping about it or anything. I'm just saying next time I'll know better. And that's how you should trade, I think. I don't know. I can't give you financial advice, but I think personally that's the only advice I'd give myself. If I were talking to myself like a friend, I'd say, hey, you made money, you did well. Just next time, don't get so skittish so quickly if the lower time frame or the higher time frames are looking good. And the lower time frames were shot to pieces on Monday, first thing Monday. So I don't know. Anyways, point is, it's done. It's over. I'm moving on. And I really was looking at AMD as the next possible trade. And we'll go through that maybe in a little bit. And then FANG, I'm still waiting for an entry, but it's come pretty much back to where I thought it was going to be. And I'll talk about Wolf as well, because I think that's an interest to some folks. So what about AMC? Well, I mean, it is exactly where we thought it was going to be. So I mean, there's not much else to it. Like, if anything, it didn't come low enough. Like, I think it could have come a little bit lower and tried to push to a new low. I don't personally think it matters that much at this point if it stops at 323 versus going down to like 320. The previous low was 321. So the bigger difference there would be more of like a sign of weakness. And you need to keep that in the back of your head. If this makes a lower low before going up to, like, let's say going up to that bigger marker way up here, because I still think it's going to get there, even though this looks like, no, it's not, right? Are you sure? It kind of looks like it's already doing this, but down low. I still think it's going to get there. Okay, I do. But if it makes a lower low, comes below that 321 before going up to retest the fours, I think it's possible. I'm not going to say it's like a guarantee, but I think it's possible that that's a sign of weakness because the volume down here hasn't been anything to write home about. I'm not really seeing anything that screams like this is definitely like a buy-in period. It's been very low key, which is fine. And I don't think there's anything wrong with this little range on the bottom by itself. But in the grand scheme of things, if this just bounces out and then makes a lower low and goes back up, I'm going to have to count it as like probably a sign of weakness if the volume's not really there to back up like a big move. So just keep that in mind. It hasn't happened yet. Maybe it won't happen. What happens if it doesn't happen? Well, if it doesn't happen and makes a higher low, then it's just stronger. I think that opens up a lot more doors for possibility moving forward that AMC might rally beyond expectations here. I genuinely think that this is still like at play. We might get some kind of a massive squeeze from like 330 up to like 430 really quickly. I still think that's at play. I don't think that you can confirm that yet. I think it has to be confirmed by the creek breakout. I've talked about this repeatedly. That's this pink line coming down. It hasn't broken it yet, period. Like, it didn't break it up here at the top on the 17th. It didn't break it when it came out to the side on the 27th. We've got an opportunity maybe coming into this next Friday, or excuse me, this upcoming Friday and Monday to maybe see some action there. And that's where I'm looking for it. I think that a lot of your indicators look like they're ready to go to me. Like, they look like they've created a nice bottom. And I think that's possible at this point. I would count it almost as a double bottom. It's 2 pennies off. And if that's the case, then this is very much like a stronger, or I would say it's not strong bullish divergence, but it's bullish divergence. So what I mean is that, like, if this holds as a bottom and then crosses the creek, I'm going to count this as a bullish divergence. Because technically, if you guys don't know what I'm talking about, if the price action like hits the same spot twice, right, and then it jumps the creek, and that's the big kicker, it has to jump the creek. But if the price action jumps the same spot twice, and I'm going to say the creek is just here, just for the illustration of it, and then it breaks out, you could confirm that with that divergence with, like, let's say RSI doing something like this, right? That's called a bear or a bullish divergence, okay? It's not, it may even be considered like a weak bullish divergence. I'd have to double check. And the hidden one is kind of weird as well. There's another one in there that you can use. They have like cheat sheets out there, but the simplest one is this one, where if it's like, if it's flat or if it's going the opposite direction, that's a strong bullish divergence going the opposite way. So if it's basically the same price here and it doesn't make a lower low, or even if it comes like slightly below, that's still going to look like a strong bullish divergence to me if it comes like 1 penny below, as long as it doesn't have like a breakdown, you know? So at this point, I'm still thinking that this looks pretty good as a setup for potential upside. But I also think that you have to kind of be realistic here and remember, like, the goal of this upside may be to have like a double flush. And if that's the case, I think that you're going to see some kind of a generation of a sign of weakness of some kind. And right now, one of the things that I think is kind of interesting is that we haven't actually approached on this like widening here. We haven't actually completely approached and hit that what do you call it? Downtrend. So this push up, let's see if I can get this out of the way, you can see it did check the downtrend. I have this anchored on the last 2 points. It did come up and test it. This got pretty close, and I think maybe on like a daily or 4-hour time frame, it might look like it checked it, and I'm not going to sit here and like split hairs about it. I think it's close enough that I'd be like, sure, it checked it. But I also know that operators do weird things like this sometimes to generate new, let's just say like new targets in the future. And so when I look at the outside mark here with this rounded down, there's actually another trajectory that was built here that I find to be very peculiar, and that's this one. And I'm not saying it's going to be used, I don't know yet, but I'm just kind of, one of those things that I would say is like, if it makes a sign of weakness, then I'm going to start looking for stuff like that, because I'm going to be looking for like, also, where does this cross down, like right here, when it made that wave cross and came back below? Did it check the creek? I think it got pretty darn close. I don't know if it got it, but that also would be very, very important going forward, because that S-curve would be potentially like a directional marker for where we might go in the future. Like, oh, we avoided it for now, but later we might hit it. And that's something that you want to like think about if there's a weakness in there. Is it here yet, Booksy? Have we had that weakness? No, not yet. Is it really just as simple as like making a new low? No, it's not. I mean, some of that is derivative of Wyckoff and like what that looks like, but some of that weakness is just, does the floor hold? And that makes it simple. If it doesn't hold, then okay, there's a bit of a weakness there. And you can make excuses and say it's a spring and it's like liquidity and all this stuff sometimes, but again, that depends entirely on volume. And the other issue with that is that in making that assertion, you're basically saying that this is established as a floor, that the previous bottom that it now dipped below is actually the floor. If you can't make a good argument that that's actually the floor, then I don't know if it's a good argument, right? And sometimes we've had the back and forth with the spring argument, and it's like, does this really look like the best floor? And we've debated, and at times it's been like, yeah, this is a good floor. It could definitely spring here. Other times it's like, nope, this doesn't really look like a floor, so it doesn't really make sense to have a spring here. Even still, right now it's basically a double bottom. I'm not really loving this push-up that we're currently experiencing. The volume is like dropping off a cliff right here, so I'm not a huge fan of it. We're not really approaching anything major unless we hit like 340s anyways. So again, I don't want to be like this curmudgeon all the time, but in reality, like this could have a lot more time to work itself out going into Friday. So unless it comes back above promptly like $3.40, I don't think there's much to talk about in terms of like a break to the upside. Are we close? Perhaps. The widening here would suggest that you're going to return back to about a 50% retracement on this whole structure. And that makes sense. It is where it needs to be. And the 50% marker is right there at $3.50. So it's not much of a trade to begin with, because by the time it gets to that widening, to kind of finish out the widening, it only has to go to like 350, which isn't quite great, in terms of like a Bukowski setup. We're just talking about pattern analysis. That's not really like my favorite when it's like that, because you're just basically just saying, okay, so it's going to pop and come right back to here. That's nothing. It's like 10 cents. It's nothing for some people. I think for others, it depends on how you trade it. That's still a big portion of that move. It's about 50% of the total move, but it's like 10 cents, right? So debatable whether or not that's significant. Right now, we're trading the zone that we left behind on this wick. And just 1 second. I've said it once, I'll say it 1,000 times. When you make this kind of a downward push and the reaction is not super, super strong, and then there's like a pullback, you can almost always guarantee like at some point you're going to come back and try to trade this zone. And this is quite literally like where we are right now. Like if you look backwards at those candles on the 2 hour, I'm staring at them, it's essentially just the wick back to the bottom of the candle on the 14th. It's not complicated. This area was not traded very much. There was a clear buy in there of some kind, or at least a short covering. And ultimately, we left there without much ado. And you're like, okay, but that just could be a breakaway. It's not enough volume for that, So those kinds of things don't surprise me. The throwback can be good, especially, if you think about like the setup of like, for example, an Elliott wave or something. Throwback isn't exactly like the best, but it could still establish like a nice second impulse wave if a lot of this is accumulation. So I'm not against that idea either, that this could be just like a throwback that then does another wave. And it's probable, I think we already checked it, that the 618 extension's up here at like 430. So right now, it's not going the way I thought it was going to go in terms of timing, but I don't think that I'm completely wrong. I think it's very likely that we're going to see it return back to this area still. And I'll eat those words if it doesn't happen, but if it happens, then we have a frame reference right now for where that might be. And I've got some dates again out here in like February 4th. I'm not a big fan of these pivots on AMC. I think they're very misleading sometimes, but in theory, like that's kind of where you would expect to come back up, would be right here on Monday. So I don't foresee necessarily a breakout unless it comes above here and then kind of chills out at 350 maybe on Friday. I don't really see a huge breakout happening right now this week. That could change, but I'm pretty sure that if we were going to see that, it would be just like a break here and then a hold above come Friday, and then Monday you'd probably take off. So either way, it's kind of the same thing I drew out before, just higher up. And then all this other stuff, it's like, great. Well, now all that moves over, and it does. And I think that we're going to have to maybe spend some time. I haven't really been updating this chart. If you guys are aware of this, because I've been doing a lot of other things on the trading streams, I haven't really been updating the AMC chart very much because I just don't see much to update. But I think at this point, we have to kind of look at what is the likelihood of this or that. There's certain things here that are a bit amiss. Not everything's off, but some things are. And there's definitely some things that are a little off now. Again, not everything, but some things. I think that this date around February 5th still looks okay for intersection up here around 470. If that were to happen, we were to get that second push. The other intersections are so-so. Most of them are still in the right spot, a little bit weaker. We would not be interacting with this trend at all unless we get that extension beyond 450. So as the crow flies, the main ice level back here that we lost and that we retested on December 18th, that would be right around 460 if you met it at the outermost trend, again, right here on the 5th, maybe the 6th, which is really soon. Does that mean that you're going to get to 460 by the 6th? No. It's an implied intersection, but it does not mean that you get there. And we've seen enough times that ends up being like a pivot the opposite way, that it's almost like impossible to know for sure. But if certain things happen, I think you're going to see that probability exponentially increases very rapidly. So right now, that's still in the same spot. It hasn't really moved. But I got to say, on the whole, this intersection here certainly looks more like the low end. It would not be at the high end. In order to get above that, you'd be way up top. So there's some stuff that's okay, but other things I think were kind of lost maybe in the last few days. Coming down lower instead of coming up and breaking out here. And this was an M cross down. So just in case you're wondering, why did you even think it was going to go back up? I knew it was going to come down. Everybody always says that, right? The truth is I didn't know. And I said very clearly, hey, if it breaks 345, which was right here, then I think it's going to go down to the bottom again. And it did. And that's what happened. But the reason I said that was because this setup had to break out the other way. It had to jump the creek to the opposite side. And that M cross went low instead of went up and over. So we lost it here, right? And instead of, this could have rebounded and crossed over and up, which would have put us on the outside of the creek. Pretty straightforward, actually. Same motion, different position. And every time we've had the opportunity in the last few years, it feels like, except for maybe one or two exceptions, we usually choose the downward path, like the deeper retracement. So right now, I'm there's not really much to, there's not much to this. It seems like a lot, but the truth is that these are basically 50-50 anchor points. And these little markers where you have these cat ears end up being the middle. So if you look at it carefully, you can see that is indeed the middle. It was an accurate projection of where the bottom was going to be. And that's why I knew if it broke below there, it was probably going to go pretty much back to the floor because everything was pointing that low. If this had set up higher, I don't think I would have been able to conclude that it would have gone back down that low. It didn't match any retracement levels, so you have to just kind of use what you know. So that 350 is the middle of this structure right now. That's the whip. So naturally, coming back above and breaking above and holding above 350 is going to give you the most amount of leverage, essentially, to come back to the top at about that 360 area. And at this point, things get a bit dicey. I would suggest patience above all else in this situation because I don't know if I said this as clearly before, but if I'm going to say it clearly now. So in theory, this just breaks out and goes all the way up to this hook value, right? But in practice, what we know is that sometimes that's actually this pivot that we're seeing as something that looks like, okay, it's obviously on like the 4th, which is next Monday, to the 5th. This is appearing all over the market. I don't think it's just AMC. It could be that, yeah, that's going to be a big markup to the upside, or it could just be like the middle of a very large structure. And I don't mean to make people like aggravated or anything like that, but it's kind of like what happened in August of 2022, like first of all leading into August and then leading out of August, where you create a series of creeks, but then it actually fans outward and it takes a lot longer than expected, and it creates that kind of flattening. And it really depends. I have this pink line. I think I mentioned this before. I said something like 390. I don't know if you guys remember that, but I said, hey, if it gets stuck at 390, you've got a problem. Because if it makes the advancement here, but it gets pinned beneath 390, which is the cat ear line back here, then I think what is most likely is that you're going to generate another push. So if you recall, when we got that big sell-off in March, remember the next 180% to the upside, it did happen, but how long did it take? It took a really long time. And that was just for distributive action. It was nothing else, you know? And so the best way for me to kind of like gauge that is actually to use these alternating trends. So what that would look like, I guess if you're just like wondering, well, what does that actually look like? It would be like you're skipping over this area, instead using it like a pivot. And so you'd end up with a series of, and this is kind of like, honestly, one of my worst case scenarios, is if it came up to like, let's say 390, and then it failed, you could actually come back down again. And this is where you start getting like a really slow build out. So what would happen is you would generate like a really tiny micro M cross, and then you'd have like the build out on the other side. And this is essentially what happened after. It's like a long M cross, basically. And this is essentially what happened after, as you guys are aware, the big March sell-off. It was a way to enact a secondary distribution. And so it would probably look something like this, and then you'd end up having like a buyback in, and then there'd be like this big move up. And it would come up to $5 or something in the future, but it wouldn't happen until like way later in like March, right? And then you'd end up with like another sell down. So I don't want to like make that the dominant, like, oh, here's what I think Booksies thinks what's going to happen. It's going to go forever to the side or whatever. I don't know yet, but I think there's a definite possibility of that. And the more I stare at the chart, the more I'm wondering if the reason that we're generating this kind of long-winded space is because we're actually waiting really long term, essentially, to break out here. And we're just doing like a really large version of what we're seeing right here, which is like an M cross. So let me clean the chart real quick. I'll use a different one. I think I have a chart that's a lot cleaner anyways, so let's use this one instead. So it may seem a little bit silly, but if you think about what I said earlier about the fact that we hadn't traded this range, remember we were talking about how like, oh, well, maybe there's a desire from our operators to actually trade this area right here, which never got traded. I wonder. Well, part of the theory, remember, if you remember originally, was I thought what was going to happen is we were going to go up, which didn't happen. We're going to go down, fill the gap, and we're going to trade here. And that was the kind of original thought that I had, okay, was that we would trade low. in this pocket because it was left open for that reason. But imagine for a second that you're looking at this and you're thinking about distribution, not accumulation. Okay? Just for the sake of playing the devil's advocate here, and you're looking at this and you're thinking about how when you generate distributive cycles, right? And we kind of already did this in some ways. We're really looking for that laydown that fails to recapture the top, right? So this was a way to trade again this region low that hadn't been maybe not sufficiently traded for a while. It took a really long time, right, to get us really comfortable trading in this area again. And it took months and months and months. We went sideways for a long time before we were able to kind of regenerate into this area and like hold it. Okay, so for example, if you wanted to trade this in order to get down here, you just do a series of up thrusts. Ultimately, this was a fake out because it looks like it's going to go above, right? And that would have been very bullish had it held above here and then took off. It would have been basically like an SOS, right? If this had taken off right here, and we know this has happened. We looked at examples of this very same thing on other charts, and it was essentially one-to-one with what I just drew. This would have come up, SOS'd, and then taken off. It would have been gone, right, to the wind. In the wind, as I say, okay? But let's say, for example, that you want to do the same thing now, but you want to trade the lower area. Like, well, how do you do that? Well, it's pretty much exactly like what happened back here. Where you have like an early move it's conceptually the same thing as what I'm trying to say. Like if you look carefully at where the distribution's happening, right? And you see how like this is where it's mostly been trading. Notice that this doesn't actually come back into it very far at all, but that the dominant spot that was then traded was below, was this area that was like jumped over. You see that? So like in theory, in practice, this is kind of like the same idea, right? Like the dominant place that you've traded is here, which we knew that. This isn't like a mystery or something, you know. The secondary place you trade is right there, which we hadn't been there for a while. We passed over some of it, but it wasn't like a big deal. It was still kind of technically in the same range, yada, yada, yada. There's some differences, right? Now we're in like the gap zone where you haven't traded at all, almost at all, okay? And I think the same thing would apply to this situation, looking at like where was the dominant trading happening? It was probably happening like right there. You can see everything else in this period is essentially like wicks down. And then the next desired area to trade is like right there. So you trade low, bring it back up, so on and so forth. This ultimately becomes this very long-winded build out, and this had really deep retracements. Like every time it retraced like 70% or something ridiculous. Like so the first is like a attempt to jump over, it doesn't really do much. The second does jump, and then it still retraces all the way back down, right? And it doesn't build out until way later, and then finally comes up and meets like what we would call like our ice level, right? The level that it was trying to get to. We thought earlier, yeah, maybe it was trying to get there. So what I'm saying is it's possible that what we're experiencing with these pivots, very possible, that what we're experiencing with some of these pivots is that we're actually experiencing, and I think that we're a little bit stronger right now than we were back there, but we might be experiencing like a drive towards like more of a center on this next structure. And so part of my concern right now is that the desire to trade even where we are currently is really just a desire to then later, and you can see what happened, this turns into the distribution top, right, is to then trade again below this, which does line up with what we were originally kind of thinking. So one of the things I guess I'm most concerned about at this particular time is that if that's the case, it's very, very possible that that's the case. If that's the case, you could still end up with like a pretty massive push-up later. You know, it could adjust itself to a number of things, right? You can see this is February, end of February. Where is that pocket at? Notice that's the EMA is the same EMA that we have back here on the 4 hour. All right, so it's not a huge deal if it breaks the EMA. So one of my concerns is that we're going to see something along those same lines and end up with like a jump here that does jump the creek, but then retraces and starts generating like a really tiny. And I think this is going to be a pretty important part of that right here, this guy. So one of my concerns, this is not the biggest one, but one of my concerns is that it's essentially going to look like this, which does kind of ring true to me. That would get a breakout, and it will break out and run pretty far, but it stops at like 390. And then what we're really experiencing here is like the middle of like a perceived wave. And we can see it, but we can't like easily define it. Usually this happens when it's not, because it's not done yet, right? And you're like, oh, well, it's going to happen. Like there's something there. Yeah, there is. So imagine for a moment that you didn't want to break out. One thing you could do is you could go for this gap fill on the opposite side of like this ice level, right? So the opposite side of this ice level, I think the gap goes pretty far up. But really, we don't need to worry about it. Wolf is crossing 6. I figured it might go green this afternoon, so this is a good sign. We're going pretty green here. Closed at 520, so actually closed really high. I don't know if it'll ever get there or if it'll get to the bottom of the gap. But either way, it does seem very logical to me that if you were going to hold this move, that you would basically like pin it down until earnings. And then potentially have a run up after that. And it would look like it's going to just go, but the first pump would be some kind of like a double flush type deal where it like pops and then drops a lot. And then the second one, because it has to do a 1-2, would be the 2 that crosses the actual creek. And then the last one is essentially like a distribution here. And I guess one of my biggest concerns is that like we see something like this happen and everybody gets super stoked as usual. And then there's no real follow through on it. You could end up right back to where you were. And then the next place that you would travel to trade would actually be below this marker here, which is like 342 or something like that. So you would come back down to trade low. And now you've generated like a new creek on the outside. This looks ridiculous to me, but we've seen some ridiculous things on AMC. And it would not surprise me at all if something like this happened. And it would probably be very accelerated to some degree after this point in time. But if your desire was just to trade low again, you definitely could do it. So I'm not saying this is the most likely thing to have happened, but I could see it happening. So I just want you guys to be aware. The way this has gone has been very much opposed to a lot of the early ideas that I had. But there's some things that I think have maintained. And one of those things that I'm most concerned about is this. The desire to potentially try to trade low down here. And so my concern is that we get too excited about, and it probably would end up going down first and then going like sideways after. Well, then when is it going to go? I don't know. If it's just something like that, that'd be super long-winded. We've talked about a lot of different things on this channel, so I don't want to make it seem like that's the only thing that could happen. It's definitely not. And for all we know that this desire to trade low could happen really rapidly. If that moving average does get dropped, it's probably going to be like the midpoint here. But you could do like a simple enough analysis and say like, all right, that could easily be how you get to 226 pretty rapidly, especially if it's dumping through an area that we've already traded, just like we did here. We did a 50-50 right around the floor. We do a 50-50 around this floor. From that top, it's bigger than this one. It's like a widening. You're going to go down to like a low, like down here. So I don't know, man. I'm like open-minded about it. I don't want that to happen. I wonder though, if this is something that we need to consider. You guys are talking about like GME flying. It's looking okay. The big thing about GME was it already made a dip down in a after-hours session. It may make what's called an LPS, and we'll see what happens. I'm not convinced it's done yet. I think there's some work that needs to be done here, and the big picture for me is still like the exact same. Like I think until it comes up above here, and it's probably going to be around 28.48. I don't really think it's I don't think it's a finished setup. I'll put it that way. There's still a heavy risk factor that this could still slide all the way back down to like 25.90. So just keep that in mind. You're like, no, it won't do that. Look, just be careful. That's all I got to say. I'm not saying it definitely will, but it's not in a position where, like, I was a little bit concerned when it came low, and I thought it was weird that it did this drop and then it rebounded. But GME has done weird stuff like that before. And if you're marking off like, hey, we're going to come down here later, then you're just bringing it up to distribute. That's a dire trap, It definitely could be. I personally could conceive of many, many ways to set this up from a bearish standpoint and try to get that advancement and make it look convincing and then drop it back through. Especially, again, I know I don't joke about it, but I know I talk about these like 50-50 things all the time, but it's really how the market utilizes like these setups. If it drops back down and it goes 50-50, it's going to drop back to 26.50 pretty rapidly. And that makes sense because it's in line with what we see here as the lower lows that are being made. It's not complicated, They're not really trying to pull one over on anybody when they do that. So how do we know, Booksy? Well, when you know. If it comes above the top at 27.80s and it holds up here and then it advances again, holds up here. Ultimately, I didn't have any expectation that this would reach the end until probably next week. So like anything sooner than that, we'd have to kind of evaluate on its own terms. So 2 trades that I took like late yesterday, I posted them in the Discord group. One is Wolf, and I need to mark this one with the color. And then I need to, actually, no, I have an AMD, so I need to keep that one. Yeah, there's 3 trades, I'm sorry. So 3 trades that I'm in right now, all going a little bit green today. One is AMD, entered it at 114.07. It's a diamond setup. It's not, I wouldn't say it's like completely too late for this one because in theory, like this goes way farther. Weirdly, I don't know why it keeps happening, but it keeps coming. This is what happened on Apple too. It came back. It's like it's testing my resolve or something. Came right back down to the level, and I think it's to do with these parallels. I'm not positive it's going to go as far anymore. I'm not sure if it can make it to 117. Part of that's because these parallels seem to be driving a lot of this price action. But if it can get above that, it should just break out and have that bigger reaction. I always talk about this like sell down period here in the beginning and how once you're finished and you're outside, you can use that here as a model for like, oh, we can come back up to the top. That should be around 117. But there's another intersection that's right here, and I think it ends up often playing its part as well in that reaction upward. What I did is I just took a simple measurement on AMD of, which is, micro device. AMD is the processor company. If you're concerned, I'm saying AMC a lot, and you think AMD. But yeah, this is a diamond down bottom right here. There's a widening and then a quick narrowing, and then it breaks to the upside, and then it holds support. Potential here then is to go from where the breakout occurred, which is around 113.81, all the way to 117.25. Okay, so like, this is a really simple setup. They have a 70% chance typically that they're going to succeed. So it's a good trade. All right. If that happens, this has to increase by at least like 4% volatility, and I'll make at least 50% on the trade. If it doesn't, then it doesn't. But for now, like, that's the trade. I think it could pretty easily get back to 117. But that being said, it's outside that trend. And it could be, again, a situation of like we're going from one to the next, and that's very likely. So that reactive move becomes the next target to the upside. That's basically this guy. But it's moved downward to where that broke out, and then this becomes like the new trend, so to speak. I know it's confusing, but like really these lines already existed, and all we're doing is we're going from like one to the next, sort of like a monkey jumping around on vines or something. Like you're using one area as a structure, but if you break out, you should go right into the next area. Like there's no other structure here from the first, so you don't hold on to it. Gaps galore, right? Going back up to about 120. So for now, I'm like, this looks pretty good for a simple swing trade. I think you could not guarantee it. Nothing's guaranteed in the market, but you could probably estimate that as long as this breakout holds, and we're about 50% on the 15-minute up the RSI chain here, I think on the lower time frames, it's like barely crossing up. There's plenty of space. There's a decent chance this is going to hike up here, and then pretty decent chance it's going to go back to some of these larger moving averages if it can hold, because this is still got a lot of bullish divergence in it. On like the 4-hour and the daily, it looks pretty good. This 4-hour divergence right here is ridiculous on the MFI from these previous bottoms. It's like way up. But on the bigger picture, it's still divergent from the bottom on the 20th to now, as you can see. And it's over that creek. So that tells me that the stock is trying its best to kind of turn around. You can see right there. And it's kind of getting there, but it's not quite done yet. But they keep leaving. I say they, I'm talking about the market, just the participants in the market are leaving behind gap fills like left and right. So there's not a lot of mystery behind this. It's almost like everybody's pretty much in line that AMD is worth more than it is now, or at least their price targets are. People downgraded it because they said, well, it wasn't in direct competition as it used to be. They call it like overweighted or whatever. But overall, I think it's ready to go back up and start checking out other levels, especially around 135 up to 150. It should have a retracement from this big sell-off. I went back and looked. I think it was the daily or something like that. What was the indicator that I was using? Oh, I remember. It was the, so it was this right here, which is the implied volatility. It hasn't been this low since 2015. And I know you can adjust these numbers and like finagle them however you want to finagle them, but this is like historically very, very low volatility for AMD. And just look at that move back to the creek. Like there's almost no doubt in my mind it's going to come back up to 165 at some point, like right here. The question I really have to ask is like when. Like this 150 to 160 area has to be checked. It's really more like 160 to 165. It's not a big area. So this is a really simple, in my opinion, like this is a very simple setup. And I said this before on AMD, and I said I was going to trade the short term because I thought it could still have one more downside, and then it had one more downside. And now I'm like, all right, yeah, it looks pretty good. So trade whatever you want to trade. Don't, trade just because I'm doing something. But I'm in AMD again. And I bought March 21st 150 strike. And I'm really looking for a quick swing up to the top here. If it gets to 120, great. If it only gets to 117, no worries. As long as there's money involved, I'm not concerned about it. So that's one of my trades right now. It's currently sitting at down 0.08%. It's basically flat on the day. The 4 hours is kind of a weird one. I was really curious to see what happened here. There was like a hammer, and then it just went into this like indecision candle. But that tells me that it's like consolidating. So I think if it can hold that level again at 114.40s, I think it's going to be a big bar up, boop, within the next couple of candles. If it can't hold it, it could be quite the opposite because it can be a big bar down to like 111 or something, because there's again, this is like a diamond structure, so that can be a continuation or a reversal. So I'm looking for like a big bar up, fingers crossed. I mentioned NNOX. So this is one that I'm trading on a swing from the bottom. I don't particularly love this chart anymore. I think there's some big problems with it. But it had, again, this massive diamond structure on like the macro, like super macro, like 10-year or whatever. It was huge. And if it breaks out, it's going to go to like $12 and then $24. It really is, if it can manage to hold the breakout. So right now it's having trouble because it had these repeated up thrusts that, I mean, you could look at them as like buy-in, and then this is like a backup that's going to come back down and hold, like an ascending accumulation, for example. I don't, on the big picture, think I have this chart doesn't have the diamond. It's definitely there though. Here, I mean, you can kind of see it pretty cleanly here. So when I look at it, I'm like, yeah, that's a really simple structure, and there's really simple breakout targets for it if it goes down versus going up. The overall picture here is very positive, but what? Well, so is the negative picture. Like, that's what made it kind of a disturbing play for me, is because I'm like, well, in theory, this goes really, really far. If it breaks out, it does go all the way back up. And there's a lot of trajectory up here, too, to like $24. The problem is that equally, if this head fakes here and then drops the other way, which is what it looks like on the daily RSI, it looks like it's about to go the other way, that's bad, right? Then this becomes like a gigantic cat ear, right, with a fake out. And this actually goes all the way down to like $1. So I'm like, man, I don't know. Like, there's nobody out there saying that this thing should be a dollar. Everybody's pricing it at like 11 or 12 bucks. So it looks underpriced right now. You know, this particular area right here that it traded at around 10.50 to 11 is essentially like your liquid center to begin with, and it's the one that it needs to break, I think, ultimately, to get back over the top and to start really taking off. You can see right now the problem, of course, being that it just got there. Like, it just got there the first time it got there in a long time, since basically early 2024. And so it hasn't broken 1060 yet. We're at $7. So I'm still thinking like, oh, it's going to go up probably one more time. So what I'm looking for is I'm looking for essentially this backup to not break down. And so what I want to see is I want to see the M cross here come up and over, make a new high, right? And then that enables it to at least have that next push. So I have 1250 strikes for this. And I think it's possible, but it has to kind of hold where it's at now and it has to re-advance. And I think this is a tough one because it's not really a great entry right now. Technically, like it hasn't confirmed that breakout. There's a lot of problems with this entry. Like it's very risky, me entering it right this second. And I noticed like after I posted it, I was like, yeah, this is not the best one. Like if I were to recommend ones, it looks pretty bad right now. Like looks like it's gonna have some problems. It may take a week to work it out, and it may end up not working out. So, so short term, I'm liking the swing. It seems like it's ready to go back up to about 810 or above. I might exit and re-enter in a better place because I think that in the future, even if this does pop to the upside, a better entry would be after that, like when it comes back to retest the creek. Then you're going to get a pretty nice move, I think, back to the upside. At that point, if it can get up high enough and hold, I think there's a pretty good chance that we're going to see, again, it's not like nothing in the market is perfect. Nothing is guaranteed, but there's a pretty decent chance you're going to see like near 14 before it's done. So, like, I'm feeling pretty positive about it. I think it's a little early. But anyways, if you want to keep NNOX on your watch list, you might be interested in trading it, especially if it jumps back above here at 9 and holds above like 850. I think it'd be a really strong trade at that point if it jumps the creek. Really good chance if it jumps the creek that it's going to advance way back up to near $12 to $14. So really simple trade, easy to follow, I think. Last trade that I'm kind of invested in right now is Wolf. Same deal. I kind of feel like I got into Wolf a little too early. So there's a lot going on in this chart today that you probably don't recognize. So this green line is the VWAP that I've got. And, there's a lot of different ways to do VWAP. Obviously, this one is going to be a little bit delayed because it's set up to do it on a daily time frame. So it's not going to show you anything until the end of the day. But you can kind of eyeball where it is, and we'll see tomorrow where it is. The way I have it set up, it's just not it's not perfect for like day trading, for example. It'd be more like a swing over weeks or something, or several days. But point is that I think this is one of those setups that it reminds me of a lot of things. This could be a spring. I was looking at it earlier and I was thinking about how like technically this is where that second cat ear should show up. And that makes me really nervous because I don't think it's shown up. I think this is the first. This is the walk down. The second cat ear does like one of like three things, and we've talked about it multiple times, right? The first part of the setup is the easiest. One is that it breaks down beneath the ice and it generates like a lower hook. So that would be like the hook. So when the cat ear itself turns into essentially like the hook. And that one's pretty straightforward. It just looks like that. This is what happened on AMC when we were walking down this past week or so. It's pretty straightforward, right? It turns into like an S curve. The other thing is that it comes back up. When it comes back up, then it opens the door for like other possibilities. This is kind of a nefarious possibility here. And so the one I've got illustrated on the screen is one that I suppose I'd be concerned about, that there's going to be a buy-in right before earnings tomorrow, and then it's going to pump up to like near a breakout level. And it could be like last second in the day or whatever. But if it comes above, I've got to just warn you, okay? Yes, you might look at this and say, well, technically, Booksy, this hit a low. This is an auto reaction, a phase B top. This could be a spring. Once you jump the creek, then you just like take off. Yes. But I got to warn you that in the years of looking at AMC's chart, one of the things that happens all the time on AMC's chart is that you get a fake breakout, if you will, of the creek. It seems a little bit messed up right now because you'd be like, well, why would it do that? Why? I'll tell you why. Because this downward channel has been generating a lot of interest in coming back to the gap fill at 481. And if you want to successfully get a gap fill now as opposed to later, then all you have to do is generate right here a false break. And so how would you know what a false break is in this situation? Well, the good news is this is not that difficult, because there's only one bullish outcome, which is easy. And that is that this comes up and it jumps the previous ice, which is right here. That's this last lending trend. So the wave comes up and it breaks above 725. Is that late? No, because technically that's the top. So you would basically have like two layups. You'd have one layup that starts up here to 670, and then the second layup would come up above 738 area, and then hold, and then advance. This is really the confirmation. This is really where the buy-in should happen. Because even though you might buy here, you're buying on risk, like heavy risk that there's not an upthrust here. And I've seen it time and time again on the cat ears. But when you get to that last ear here, if there's like a weakness in the second half, right, and the second half of that does not cross over like immediately, you should be very concerned about this last little ear being a pointy thing to the upside. So this is a bit of a bizarre way to look at things, I know, but just remember, this is the bigger wave right here. Okay, so if the first wave fails like miserably, especially if it's like really weak and it's like listing down, right, and it's failing to break out, be very careful about, especially if this is like right on earnings, be really careful about that set pop, because historically all it has to do is get above this previous top at like 675, and that is usually what the aim for the bull operator, or excuse me, the bear operator is. So it would be like a head fake to kind of convince people that they're going to run, right? It does not break any of the ice levels, right? It usually is like barely a fake above it, and then it dumps back beneath it. If this happens and it comes back beneath this, whatever is established here, and I'm not positive this is going to be the case, but I think this is likely. Based on where this earnings is tomorrow, I think it's very likely that maybe today, I don't know, maybe in the morning, this comes back up above the top here and trades right across the top of these moving averages like it has been. That's going to be the clincher. If it drops back beneath here after making like an upthrust, again, I'm worried it's going to be like an earnings thing. It's almost a guarantee that it's going to drop all the way back down, because everything else supporting this trend is low. And that's another thing that kind of should always pique your interest, is like, where is the previous creek? Like, it's way down here, you know. So if it comes up and peaks and then tries to drop back to the previous creek, there's nowhere to go except back to like 520s. When you look at the intersection of the previous creeks, all of them, all of the directive momentum is heading back towards, very clearly back towards a Friday 480. So why not just trade puts? Well, I might. I think if tomorrow this sets up that cat ear, I'm going to be getting puts in addition to like what I've already got with calls, because in my opinion, it's like a simple enough kind of thing. If that makes that move up here, and I don't know if it's going to be that high, it may end up being like kind of low, like right here. It doesn't really matter. It's a cat ear, period. There's a very real possibility that this comes down to 480. That does not mean it's not bullish. It just means that this top itself is distributive. When we look at the grand scheme of things, this still looks like a gigantic wedge to me. And I don't think there's any question in my mind it's a wedge. So I'm not worried about it in terms of, oh, could it eventually break back out? Well, no. I mean, I'm not worried. It definitely could. If this gets a second low here, in some ways it's better. Like, we want to see that flush down try to hit the bottom. And if it doesn't, it makes a higher high. Then the next move is the breakout. And it's very probable, in my opinion, that it's going to break back above this 680 area. up to 750. That 750 that we talked about, that intersection where that confirmation is actually in the same spot as where the bottom is. So it makes perfect sense. It's where it should be. So if any kind of a drop happens, it's not the end all be all. It's probable that that's more of like a spring, actual spring-like action, right? Like a final sell-off, and then we can whip back around the top and head back up towards like $12. This is a big trade if it happens. Like, it's going to make a lot of money if it happens. So I'm definitely keeping my fingers on the pulse of it. I don't think that when you look at indicators, you're not really going to get a lot of information right now. Like, I've noticed a lot of them are kind of chilling out. I don't really see anything glaringly obvious that's like, oh, it's super bearish or it's super bullish. If I were just glancing at it, I might say, it looks kind of bearish because, like, you know, MACD's coming down, but it's curling up and blah, 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 blah. But really, most of it's just chilling out in the middle. And at the end of the day, like, when you look at the bigger picture, the question is, like, has it broken out here? I think it's pretty darn close. If you use the moving averages, it's jumped. And you can see, like, it's setting up, like it's trying to hold. I don't know if it will. Is it divergent? Oh, yeah. Yeah, all three bottoms are divergent, meaning, like, it's been pushing back to the upside. It's just, like, bottled up. You can see it, like the pressure of it. It's condensing right here. So my thing is, like, there's certainly a possibility for downside, but even if we got that downside, like looking at like the 4 hour and the daily, there's just sort of an indifference. I feel like, you know, it has enough wiggle room to do like a quick wick down if that's what the operators want to do and go ahead and get that gap. And they could do it right here. They could manufacture it on earnings day pretty easily. But then I think at that point, it's hard for me to like see it continuing to drop. Long term, I think it might. I'm not going to like zoom way out. But like long term, I think this might actually build out like a huge range. And I think that long term, this could be a massive area between about, mostly about $14 to $15 and $3. And I'm not going to get into that right now, but I think like that's something that I would also consider as a very strong possibility. But we'll get to that later. For now, we haven't tested the 4 hour in a while. It's up here at like 950. I think the daily is even higher. Hasn't been checked in a long time. It's way up here around like 14. I'm seeing a lot that to me suggests this could go all the way up to $14. I also think it's very possible eventually this could get up to $25. I'm not 100% sure how and when it gets there with all pieces of this. But for now, like, I'm just watching a local bottom into an earnings report. It's about to be going. Tomorrow we'll have I think we'll have our answer, but I've got the, in terms of like the flush and all that, I've got the general idea here. I think it's mapped out as like a possibly map it out. So if you're in the play, cool. Just be wary of that head fake tomorrow and just be mentally prepared for the possibility that this doesn't go the way you think it's going to go. And then I'm personally going to be like dry powder kind of stuff. Like I've got some ammunition on the side. If I'm going to trade it, I might trade it like in and out kind of thing, but also maybe even puts just to be safe in case it does dump. It covers any kind of loss you might incur if there's some downside, right? That profit might offset it if you can average down or whatever with that profit. So I'm feeling like for the most part, this looks pretty good. If you're just looking at like other basic stuff, you know, you look at like the previous floor and just ask like, is it holding? And the answer is no, not really. You know, it's trying to hold. You can see like this previous bottom would be a really important place to hold. And that if it doesn't hold, you know, so on and so forth. Again, there's all kinds of stuff you could do to kind of just look at the basics of it. I'm in the trade long, but I also think that, you know, you got to do what's right for you. So if you're not in this trade, it may even be better just to wait. I don't think you're going to miss something like crazy. Even if it like gapped up, like I think you'd still be able to wait and see what happens next. So, Yeah, I mean, NNOX looking okay. It's really just coming up to that hook intersection right now on the 2 hour. There's like a double whammy right here. Here coming down on this structure, this widening, and then also here coming up. So nothing really great to write about here unless it comes above this like 780 mark. Not that it's a bad move, and I'm glad that I was in it low, but at the end of the day, you know, is it super bullish yet? No, not quite yet. Again, I think it's kind of right where it needs to be to take off to the upside, but it hasn't quite made that push. And same with AMD. It keeps kind of coming back to the floor. So we may not get an answer today. That's an inside candle. Very low volume. I feel mixed feelings about AMD. Like, I know it's very likely going to run to where I think it's going to run to. I really do. I think I'm right about it. But I'm also like, you know, is it possible it drops back down first? Maybe. It might have like a gap down in the morning or something and then come back up. So it's just having trouble getting above 114.90. I don't know. It's like right there. It's ready to go. It just needs to go. I just don't like that pattern. Yeah, whatever. Looks like AMC is up at $3.33. GME is at $27.42. I was asked about WTO. I'll check it out. I haven't looked at it in a minute. NU is still going. You know, I'm kind of surprised that it's still going, but it's still going. I'm not sure if it's losing steam. You probably have to watch that 4-hour RSI has been a really good indication of whether or not it's going to hold. So if it holds, and it looks like it is right here, you know, it could still push. I mean, this thing could technically go all the way up to like 1350. This was the chart I was talking about. MPW, sorry, I'll do this real quick. Is that about 450, 447? It looks about right. So I figured it would come up above, hit like 480, and then it has to show that it's going to hold the support right in the middle, which is around 440. And it has to hold that area in order to continue any kind of advancement right now for a number of reasons. If you go back and you look at where that cat ear was, that's the middle. So it's already done like a retracement. It's already had like its 50% retracement here on this bigger move, or close to it. So the rest of this now has to be held in order to really continue upward. Otherwise, yeah, we're still at risk of much the same thing that I had drawn out before. The FANG chart was one that I said I really want to enter long term. I think there's a potential for like a massive trade here. It's doing what I expected, which is nice. It's taking its time, which is good. And I think that it's been an easy enough one to watch and follow through on. So the next thing I'm looking for, it did come pretty low. It looks like it almost came back down through that creek. So I'm not sure what to make of that just yet. It might be that I drew the creek a little wrong. I don't know. It's kind of hard to tell. This breakout is probably more important than the rest of it. The angle is probably right. So I'm going to go to the bottom here where it found support. Instead of using those tops, start right there. I think that's more likely where the bottom is. And it's right on it right now. So what I thought was it was going to come down, hit this gap zone, maybe bounce out a bit, and then try to come down again and hit the second gap zone here. But, yeah, so it did dip below there. That's my big question. So if that is a bit of a weakness, then they'll bounce out and they'll drive the price back down again. That's where I think we talk about potentially like entry, and it could be right around earnings. So yeah, we'll see. I kind of want that to happen. I know it sounds bad, but I think it would be really easy to trade if it dropped hard into earnings. Except for the volatility hike. think it would be pretty easy to trade. So keep this one on the radar, so to speak. You like me talking about it, but I don't know why you want me to talk about it when it's not moving. Goblin, why did you want me to talk about it? You always ask me about WTO every day. Well, this is a shares only kind of position. Man, this is ugly. So I can't stress to you how much sometimes like these I'm gonna turn off some of these moving averages. Sometimes these charts just really don't work. Oh, he's using Haikanashi. Well, I would use line chart, but we found out that doesn't like do what I want it to do. So this is interesting. There's a lot going on here we could talk about. Yeah, so it's definitely like in a spot of potential distribution. And if it holds and it can get back above 30 cent right now, notice it dipped below and it's been wrapping around 30 cent ever since. And that now it's coming to a place where it's coming from below. It's attempting to break back up above 30 cents. You can see why that would be significant. Now let's look at the way that this moved. It's so much easier sometimes to see stuff with the Haikanashi. Sometimes. Yeah. Okay. I mean, it is exactly what it looks like. It's like a cluster cuss of mixed signals. Everything's kind of chilling out in the middle. Like I could read this as a divergence or I could read it as a bear flag, you know, and then if you look at the hourly MACD, it's the same deal. It's kind of like it looks divergent to some degree, but then it's got potential that this is just like a double top. This is ugly. I'll just say this, like I don't think this has if you're not in it, I wouldn't trade it unless it comes back above 32 here with support. Cuz right now it's acting like that's the ceiling for sure. It was established probably long before here, but this is definitely one of the first places that I'm seeing it like really heavily used. Yeah. So this area has been in contention for a while. And what I would say is that it looks predominantly like it's distributing here, not anything else, because it keeps pushing up above this like 31.5 area and then dropping below and closing below. And that's not a good sign. So all those wicks are kind of showing that that's right now acting like a ceiling, which is nice if you're trading it, because if you haven't already entered, if it breaks above it, it's like almost like a sure thing. Like that's a really strong break. If you have already entered it, then this just kind of makes it like, okay, there's a wall. And then the wrapping of the 31 or the 30 cent here bothers me quite a bit. So what was accompanied with that was what I saw as kind of a widening spread. Like kind of. But if we were just using like the most basic stuff, trends, for example, may even say it's like a falling flag. It's a really weird chart. it never made one test without the other. So like, you see how it broke low here and then it goes high, but then look at the next one. It breaks high and then it goes low, and then the next one breaks high and then goes low. So it's really just sandwiched between 31.5 and 28.9. Yeah, I'm not really sure why, but... And then that's anchored around the middle of 30 cents. So this still kind of like rhymes with what we talked about earlier, which is that if this is a distribution, this ends up being like the middle of a big sell down, and it probably goes as low as like 20 to 21 cents. Like, comes down pretty far. Unfortunately, right? Right now, all this S curve stuff is really just not going anywhere. So part of the reason why this looks so ridiculous is because it is ridiculous. Like, it's not moving out of this range here. So it's generating like all of these normal, what we would think is like a normal M cross, but it's doing it in like a really compressed space, and it's just not moving. So there's this bizarre kind of a dichotomy here of like, well, on the one hand, it's not moving, and on the other hand, it's not moving. So it's like you get the positive of, oh, it's not dumping, but you also get the positive of, oh, it's not running either. And I can't really tell. I'm doing my best, I promise, but I can't really tell. Yeah, and then you can see like this creek right here from the top. I'll make it like some other color, but this creek was set up pretty early on. I'll just make it bolder. That hasn't been broken yet, and it's again intersecting right at that 30-cent mark. So there's just a lot here of it needs to hold. When it's currently doing it needs to hold 29 cents. It needs to break 30 cents, and then it needs to get above 31 cents. So I think a breakout here would be pretty violent. It would probably move up pretty fast. And yeah, I guess it would probably jump this creek too, whatever this is. It's really not much there to talk about, but yeah, that all would have to be like pretty much now. And if it does meander, it's okay, but that ultimately was the defining creek. There's nothing else until all the way up here at like 37. So the expectation would be that if it broke, in my opinion, if it broke above, then you'd head up to 37 pretty quickly. Same deal. None of these levels have really changed. So it's just wider. That doesn't mean that it's definitely going to continue after that point, because you still have to have confirmation. Because this, I think we talked about this before, this is ripe for what we call like a UTAD. If this ended up being like the second part of a UTAD, and that's, again, I know we talk about cat ears all the time, but like, it's a good analogy because you see it visually. And we talked about how this weird one in the middle is actually really low. It kind of reminds me of what we're experiencing right here, in fact. It's just strange, the setup. So if it were going to distribute and not break out of this top, you can see why that would be the critical spot to do it. Given that if it does break, I think you're going to have a pretty decent chance at like that returning leg up here. Like those short positions, in my opinion, would be covered down here. And I think it would return almost all the way back to 75 cents, probably. That's where it would happen. And if not, then that becomes like a generated cat ear kind of situation. It's also going to be in that same spot, given that there's a little bit of extra leeway here that could change some people's opinions about it. But I think on the whole, it just kind of gives it like a little bit more berth to kind of do what it needs to do. if it's a cat ear. So yeah. So that all creates a system of breakout, breakdown. So I would say it seems more likely right now this doesn't just S-curve, like, and just drop presently, but that instead it goes up, and then the decision is here. The confirmation is here. I think this is more likely, to be honest. So if I were trading it, I'd be like, yeah, from 29 cent up to like 39 cents, pretty good trade. Assuming it broke out. That's a 30% trade. It's not bad, especially if you don't do options. Then you can see that as a decent trade, but you have to see the break above 30 and then 32, and so maybe the trade's really more like 32 here. It's still 18%. It's a good trade. Then I would be worried about the cat ear type distribution if it sells off again. Let's take a bigger road here. I want to look at like 4 hour. Yeah. So this is the lowest on the 4 hour. It's right here at 30 cents. So the fact that we're at 30 cents again and we're higher would indicate that we have a potential divergence, but it also means you got to see where we are, and we're at like near 50. I mean, it also means we have a lot of room if there's a drop. So mixed bag. I mean, it certainly seems like the right time to make this move or this move. So I guess the good news is that for as long as we waited, that this might be finally coming to like a better conclusion soon. In the grand scheme of things, if I saw this on a normal chart and it held that creek, and then jumped the creek locally, I would expect it to advance. Does that make sense? So if this were like everyday chart and not some penny stock or whatever, if this hit a low here and then reacts and comes back down and holds the floor above the creek, even though it's making pushes through that floor, I don't like that. It's still making a higher low, and it's still technically holding what was once a creek here. So really, like, the stop loss for this is still very low. It's still down below like 27, because that would be like losing that middle. But everything else here looks okay. Like, it would be geared up for a potential move to the upside. At least to 37 cents. So I think there's a decent chance that happens. Yeah. It might not be a bad swing. I just don't think that the entry's here yet. I think it's kind of like on the verge, but not quite there. It could be an all-at-once type deal in some weird move after hours, but if I were just waiting to, again, to find that good entry, I think I would be using just sort of common sense and wait for that a jump over 30 cents, and then I wait for the jump, especially here, I think will be the big one, up here around 32. So I'll put an alert here at like 32. If it hits it, I'd trade it again, you know, from here to there. I think there's a decent chance if it can make that push, it's going to go. I think I have, I might check my position again for that, because I think I might have devoured all that food. She better not have eaten his food. Hang on. I'm really annoyed. No, she didn't. Good. One of my cats has been kind of greedy lately, eating the other cat's food before he gets to it. I don't like that. It's not good, man. It's disrespectful. Yeah, WTO is trying to get over 30 right now. I think it's trying. I don't know, man. It might get there. Hmm. Oops. Sorry, I'm looking at WTO right now. And then I put a mulled thing in my coffee cup. Gross. Yeah, interesting week, huh? Red Monday, better Tuesday. All right, let's get this off of hiking on a sheet now. Go back to normal candles. It's better. Yes, I mean, mixed bag here, but there's definitely some hope. I think that this could potentially ride up pretty far to this top area, maybe by Monday. We'll see. Kind of wonder if it's going to like chill out a lot first. Something like that. All right, guys, I think I'm done. All right, I think I'm done. Kind of ready to be done. Yeah, I figured that one was going to get stuck here. Oh well. Yeah, you might be right about Wolf. I don't know yet. I'm not convinced it's not going to like dump even on good news. I just feel like that setup bit too similar to, especially if it can't hold here. It's just a bit too similar to like the typical like wave drop kind of thing. So I'm a little nervous about it. Yeah. And some of these other trades are kind of so-so. All right, guys. You have a good day. I will talk to you tomorrow.